Forget about the price. The price is distorted, period. It's distorted because on the LBMA, they can have a float of 260 million ounces, but trade 2.9 billion ounces per day. And I think you could argue if you have gold, this is the time to trade it to silver. You don't get opportunities like this very often. 150 years is the chart that I looked at, and it had only touched 100 twice, once almost, but twice or three times in the last 150 years.
Wow.
And every time it's anywhere near 100 to 1, the ratio falls back quickly. I mean, it just always has. And yes, you're right. It does have that historical catch-up pattern where it continuously lags behind gold in as gold makes its bull move, but then typically will dramatically catch up and outperform gold on a percentage basis. Anytime you get near 80 to 1, Ivan, it's a sell signal for gold and a buy signal for silver or an exchange. You go back, 5,000 years and the ratio geologically was 16 to 1 for almost all of humanity. And now it's 7 to 1, as Keith Neumeyer will tell you. It's depleting in nature.
Right.
It's found in like your skin is epidermis. It's found in nature in a form called epithermal, right near the surface. Big deposits have been exploited years ago, and so if you have a 16 to 1 geologic ratio for most of human history, that has now fallen to 7 to 1 because it is the easy stuff has been scooped up. The price average has been 40-ish to 1 for the last 200 years, largely because of gold's role as money and silver in an industrial capacity. That's man's ratio. God's ratio said 16 to 1, falling to 7 to 1. Man's ratio for the last 200 years has averaged about 42 to 1.
Right.
And now it's 100 plus to 1. This is an opportunity you do not see but one or two times in an investing career. Look, I'm taking my gold salesman glasses off, and man to man, I would tell you that it's the opportunity of a generation. It truly is. And when you see the amount of concentrated short positions that seem to be unwinding in both London and in COMEX, the United States, because being naked short when there's this kind of global demand coming out of China, who's flying all around the world buying up doré and concentrate, in particular Peru and Latin America, paying double what the West will, sending it back to China for refining as the second largest producer of silver in the world. And
Right.
India buying north of 850, 900 million ounces over the last 4 or 5 years, and Russia adding it to their strategic stockpile. I don't ever remember a country doing that. And massive deliveries coming into the US, and the LBMA going from T+1 settlement to T+8 weeks because there's a shortage of trucks.
Wow.
Shit's breaking everywhere, and
Right.
things are happening everywhere, Ivan. And these distortions that you see only magnify the final outcome. But anytime in history you go back, you're anywhere near 80 to 1, let alone 100 to 1, you're near that reversal, that catch up that you speak of. And I would say there are very few times in history, in my lifetime or in anyone investing lifetime, where you can buy something that is that severely depressed based upon historical averages going all the way back, whether it be ratios between gold and silver or just, logic would dictate that selling at these prices compared to where it was in 1980. I can't think of too many things that you can buy at a 40% discount to its 1980 price that has expanded massively in its uses. Things are breaking. And I think you could argue if you have gold, this is the time to trade it to silver. You don't get opportunities like this very often. I think the mistake that the crowd that jumped on following the craziness back to 2021, that were following you guys and following the Reddit crowd and following the silver squeeze and right on the heels of GameStop and AMC, is that you don't want to buy gold and silver to become wealthy, as
Right.
oxymoronic as that sounds. It is wealth. It's wealth that's outlived everything the world's ever thrown at it, from world wars to hyperinflation to Great Depressions to pandemics to everything. And the most well-informed traders in the world now, after being mentioned hundreds of times in the Bible, going all the way back, here we are, the biggest money in the world quietly is accumulating it hand over fist. And forget about the price. The price is distorted, period. It's distorted because on the LBMA, They can have a float of 260 million ounces, but trade 2.9 billion ounces per day. That's 3.5 times annual global mine supply.
That's
Or
crazy.
on COMEX, where the contracts are rehypothecated, I don't know, 2,000%, 20 times the amount of contracts than bars. And that's what the Hunt brothers noticed in 1980. It's the same situation. But now you have countries that are motivated and coordinated and sophisticated and wealthy and standing for delivery. So, you will make a lot of money potentially when silver finally exerts itself, but that's not why you buy it. And that I think was one of the mistakes that the crowd made and got, disenchanted with silver because if you've been following silver long enough, I've been doing this for 35 years and just in your short 4 or 5 years that you've been doing this, I'm sure you've seen how crazy it can be, how it can, turn you gray or make you wonder how the hell are things so counterintuitive. And that's what happens when you have a half a dozen commercial banks that control the largest short position of any commodity traded on
Oh
COMEX.
yeah.
The bigger question is why. And I do think that the guys at silverwars.org or whatever it is did a great job of documenting the amount of silver that goes into the military industrial complex. And although they don't really post those numbers anymore in the Silver Institute, that is why they've been suppressing silver. But the only way you can suppress a market over an extended period of time or manipulate one is to push it in the direction it's going. And now you have a whole massive amount of high powered sovereign wealth funds and countries that are challenging this, standing for delivery, using the suppressed price to their advantage. So I would
Right.
say you buy gold and silver because it's wealth, number one, first and foremost. You buy it to get out of the system, a system which is breaking on multiple levels. But you don't buy it with the intention of getting wealthy, and you might, and you probably will if you hold silver, which to me is the opportunity of a generation. But you buy it because it is wealth, and if you understand that, then you're not pissed off when things don't quite go the way that you expect, as markets, as the saying goes, can stay irrational longer than we can stay solvent. And I will just simply tell you that I don't think there's an asset on the planet that offers the kind of potential that silver does with the lack of downside risk. Call that asymmetrical, the asymmetrical risk reward, silver to gold. I mean, silver potential to risk is off the charts in your favor. And
Right.
the best advice I was ever given, I was 19 years old when I started this company, and I tell this story all the time. My dad told me make only one rule when we start this company, and that's that you'll buy something every 2 weeks. And back then it
Yeah.
was silver. I didn't have any money, and although gold was 300 bucks or less, you could buy a 10th ounce eagle back then for 40 bucks or whatever. So, but the point of it is, I did every 2 weeks, and I've owned the company all right for 2 decades. But I have honored my promise to my father and I have purchased something every 2 weeks for over 35 years. It is the best gift I've ever been given, Ivan. It is the best advice I've ever been given,
Wow.
ever. And that is to pay yourself first because I was 19 yesterday and now I'm 44 and I'm 54 and I don't know where the hell time went.
Yeah.
And that'll happen to all of us, God willing. Father Time catches you, but you look back and say, "Holy crap, how the hell did all that time go by?" To let the laws of compounding work in your favor rather than against you, as everyone else says, is everyone else is always working against or is a having the laws of compounding working against them. Turn the table and have it work in your favor. And it doesn't have to always be compounding of interest. It could be compounding of time. In this case, the accumulation, steady, slow accumulation. I don't care if it's an ounce of silver, whatever it is, every 2 weeks when you get paid or every month, whenever it is, you pay yourself first. Because if you could have a conversation with your 54-year-old self when you're 19, I can guarantee you that 54-year-old would say, "Dude, life gets expensive. You got kids and weddings and college educations, and you want to have a life and think of retirement at some point. So start paying yourself first."
Wow.
It's just like anything, working out, anything. You have to be regimented and monotonous and stick with it. Monotonous isn't the right word. Regimented and methodical is what I meant to say.
Right.
And it's the best advice, the best gift my father ever gave me, the best advice I've ever been given. And so for young people, pay yourself first. You won't be young forever. And don't stop and continue and honor your future self and let the laws of compounding be your friend instead of your enemy.
Wow.
Because think of all the money that you've blown that you don't even think about anymore. And instead it could have been one I think you're still in Canada, one silver maple leaf, whatever. And
Yeah.
over time, it adds up. Or maybe it's a tube of silver maple leafs every 2 weeks or every month or whatever it is, a 10-ounce bar. It doesn't matter. But that's how you get ahead in life, whether it be working out, building relationships, or investing. It's compounding of time and energy and effort, sometimes interest, but in this case, it's time and energy and effort. There's no coincidence. I mean, we become a net importer of gold. The inflows into this country have been off the charts, net importers since November, as we talked about. And the central bank demand has for several years now been what has been pushing the price higher, but something's different here in the United States, no question about it. And it's interesting with all of the gold that's flown into COMEX, with the U.S. becoming net importer, with the July deadline for Basel III regulations coming into play. All of these things are interesting with, an interview I did with Judy Shelton where she's talking about issuing 50-year treasuries backed by gold. All of this stuff, Scott Bessent, the Treasury Secretary, when he was running a hedge fund, his largest holding was gold. Is gold being reintegrated somehow, some way into the monetary system? Whether we look at the massive amount of gold that's been accumulated by the BRICS nations and the admission of their at least in principle, according to Dilma Rousseff, the former president of Brazil and the head of the New Development Bank, that they've agreed in principle to a gold settlement currency called the unit, 40% gold backed, deliverable to central banks on demand. Whether we see the draining of the LBMA to levels that no one's ever seen before, and a massive discrepancy between paper contracts and gold bars available, or whether we see all the stuff coming here in the United States. Something's going on, and it's not like gold is reacting to an event. Instead, it just is quietly I believe, being reintegrated into the monetary system because not only is the public asleep, Ivan, when you first burst onto the scene, everyone was talking about silver, and now no one can't hear it. No one's talking
Yeah.
about gold. Nobody.
Yeah.
And that's the crazy thing. If you would have told me gold would be at 34.40, and you don't hear or see a damn thing about it anywhere mainstream, hardly at all.
It's crazy.
Yeah, and so that to me tells me that's still very early. It's the central banks that are doing this. It's the big money who's pushing it, but very quietly. Well, it's just either that or it does make sense, one or the other. And I can't quite tell, but if you would have told me at any point in my career that gold would be completely ignored by the mainstream as it's making new highs almost every day, I would say that's just impossible, but it's true.
Wow.
And so the retail public has virtually no allocation. Rick Rule just told me the other day, again, 0.5% allocation from Joe and Jane Sixpack to the Harvard Endowment Fund. There's virtually no mainstream retail investment. This is all the biggest money in the world who knows the playbook and is positioning ahead of the realization by the public. But these are strange times, man, completely and totally strange. But yeah, I think something is vastly different with gold. It has strength that I've never seen before. It gets knocked down by $200 a few weeks ago, and here it is way back up again. Now at all-time highs in the aftermarket here again, up $10 after being up close to 100 or more earlier today.
Wow.
34.40 basically is where we're at. So yeah, crazy, crazy, crazy time.